Good morning, traders. It is 8:03 a.m. Chicago time on Wednesday, the 1st of June, 2022, coming at you from my home trade station today. This is Trader Byte number 2244. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Um, This morning, we see a mild risk on sentiment, but overall, it was a balanced overnight session, just basically trading sideways. Um, and so overall, we're seeing a market that is absorbing these current prices, holding steady at the 41.51 area. I want you to note in the S&P, 41.47.25 is the composite point of control, volume point of control for the last 2 years. This is nirvana right now for in terms of pricing based on the auction. This is like total equilibrium. So we're in an area right now where prices have been just accepted for quite some time. We're seeing the indices are slightly higher this morning. We're seeing energies again, which fell quite a bit yesterday, went from 119 down into 114, and now bouncing a little bit higher, trading at 116.49. Still seeing crude going higher, in my opinion. Overall, there's just the conditions are such that supply is not likely to come online anytime soon, and so crude is likely to maintain these higher prices or even check or test the high made so far this year. I think that was at 130 at the prior contract. Don't know what it is now. Other than that, really it continues to be. Oh, this is stale here. Let's cut this out. Um, it's this same old. We're waiting for some key numbers today. We had the overnight session. We had some um, releases, but we had unemployment, for example, out of the eurozone for April came in at 6.8% in line. Manufacturing PMIs came out of France, Germany, and the eurozone. All were in line. And the big one is coming up this morning, ISM manufacturing for the U.S. This is the PMI number expected at 54.8, and then following that we have the job jolts openings expected to hold steady at 11.4. These are the key figures for today. We have Feds Williams at 11:30. We had Feds Bullard, who has moved the markets every single time in the last 2-3 months. So pay attention at 1 o'clock Eastern. And then after the close, we have the API crude oil stock change. We will not have the crude inventories today because of the holiday on Monday. It will be pushed to tomorrow. And then this evening, we'll have balanced trade out of Australia, expecting 8.9 billion Australian dollars on the plus side for Australia this evening. That's another high tier number. As far as earnings, yesterday I had HP, but the calendar that I used I think was incorrect because they're showing HP again, and I cross-referenced it, and it does show HP after the close today. Pre-open, nothing significant. After the close, HP Chewy, which is the massive pet retailer online, PVH and GameStop is the key releases today. And so that's what we have. Yes, PMI is really a high tier number. The one I forgot was the Bank of Canada interest rate decision, also at 10. So 10 o'clock, a half hour after the open, we have a slew of numbers coming in, and pay attention as a result. Looking at the S&P now, the S&P has a completely balanced profile, 194,000 contracts traded. The inventory is 82% long. The S&P ended up selling off a little bit on the close yesterday. Very volatile, relatively volatile close. Didn't expect that much volatility for May. as the market seemed relatively balanced going into the end of month, but it did sell off from about 41.56 down into 41.30 or so, or 28. The inventory is 82% long, and the range is only 31 points. 31 points. And the point of control being 41.51, right on top of the composite volume point of control. Did they have earnings? I don't know. I'm not trusting this calendar. It shows it. It shows it for Wednesday, today, after the close. I think it's today. So I looked at two different calendars. Um, in any case, nothing special about the way the market is postured today. It is accepting this very, very big acceptance area in the S&P, and it's accepting yesterday's auction. Okay. And so that's where that stands. Looking at yesterday and what was expected yesterday, I was looking for the market to sell off on the open, take out the 41.2150 if you recall, and to push to the over underline. So right here, this is the double bottom in the overnight session. Expected the primary scenario, the green, to push as far down as the over underline. Remember, I talked about the strong potential test of the double O, the 4100, and then from there was looking for a bounce back into the 41, 47, 4150 area. Was looking for a short early, and then I was looking for a long earlier in the session. The secondary scenario is also to drop and then push higher on an impulse, consolidate in the 47.50 area, and then break out to the upside, which it tried, but it could not make it. Here's how things went yesterday. This is the intraday chart. We opened up yesterday right up here, dropped very quickly, dropped almost to the 4100, came right back, consolidated between the RTH and the full session VWAP, consolidated there a while. Looked like it was failing back through, but this ended up being a higher low. Squeeze, and then looking for long trades, aiming for the squeeze high on the pullback here against the mid and against the prior structure. So yesterday had some interesting movement of the key levels. One, the 41.21 right here became the line in the sand early on. And then later on, the opening print, which was at 41.38, right in here. So if I draw this line neatly across, ooh, that's a pretty good line. This became the LIS 38. So yesterday was all about trading off of these two key areas. You could see that, it dinged it right there. No indication, but then it held here. It held here. It actually held from below a couple times here and here, again and again and again until the market closed, which was right in here. These two areas really marked a battle zone. There was a big battle area. If I go to my active trading chart, let's close the DOM here. If I go back to, unfortunately, I had to reload the data. So the MBO data is gone. But what happened here between 41.35 and 41.21 right in here is very important. There was a lot of trading. There was a huge battle that took place right in here. A lot of prints. If you go back and replay it on a heat map or something, you'll see there were a ton of collisions, a ton of prints, and then this whole battle moved into the 41.48 to 41.53 area here until the close. And in the close, we battled it out again near the lows. So on the close, you can see this cloud of prints right in here. And where is that? 41.35 to about 41.28, this area down here. And this area really represents the overnight low at 41.25 this evening. right in here. This area between 41, let's call it 41.25 to 41.35 is one to watch. We're currently trading at 41.52, so we're a little bit away from it. And we did have a battle up in the 50s, in the low 50s. But any pullback into this area is likely to be defended or fought because it did so all day yesterday. And I expect that whoever's got positions in that area is likely to step up again to either fill more or to defend their position. So overall, pay attention as it comes down, if it comes down into this box down here. Okay, so just an interesting order flow based note based on yesterday's session. Point of control shifting up here from down here. This morning, we are above the full session VWAP. We're above the full session mid. We are against the point of control, and we are inside of the prior day's range, expecting a choppy opening. And as we can tell already by the fact that we have a relatively low volume, 198,000, and relatively low range, I'm expecting this to be a relatively choppy open until the numbers come out. So my plan for today, and I'll leave you with this, my plan for today is to keep my hands off until the 10 o'clock period strikes. So once that's done, I'll step in. But what we've done is we've put in this higher low here on the retest, and we've had, for those of you, if you're a Convergent member, please listen to yesterday's trade talk. We had a trade talk about this. We described the structure as the market pushed up. We have a P-shaped structure. We have somewhat of a balanced structure here, and we have total balance yesterday. Look at that. Super fat profile right on top of this 4140, 4150 area, and this looks to be stalling out. So really, if you're someone who's looking to sell the market long term on a swing basis, you're probably positioning into this balance, right? You're looking for a rounded top to take your positions in. If you're someone who didn't catch the move up and are expecting it to push higher, you can see these shaded areas here. These are single prints on the market profile. So these are all single prints above. Single prints mark or indicate weak structure, and it gives us areas to target. So if you are someone who missed the run up and you've got money to allocate, or you're required to allocate money, and you missed it, then you're looking to take positions long in the flag. This will be looked at as a bull flag right here. You'd be looking to take positions long in the flag, aiming for 42.20, 42.60 above, and 43.34 way up there. 43.34 is the key balance area above. Okay, so that's the lay of the land here. There's not much I can tell you about this morning's trade except to please take your time. It is the first day of the month, so there may be some inflows. We're likely to see some inflows. It is the last month of the quarter, which is also important. It's the last month of the quarter, and we're going into non-farm payrolls this Friday. So there's just a lot going on, and it's just really important to wait for your actual setups before you decide to trade today, because putzing in the middle isn't going to get you anywhere. So I'm not going to put some lines on a screen today. I'll leave you with those. Just remember, I am not trading until after the ISM JOLTS numbers come out at 10 o'clock Eastern, and then from there I'm going to be judging where we are relative to the open, where we are relative to the full session and RTH VWAP, and then where we are relative to yesterday's auction. Those three key components are going to dictate what my bias is, and then my job becomes simpler when executing, because if I'm only looking at a specific bias, I don't need to worry. If I'm only looking long, let's say, for a continuation into the 80 and a 4200 above, which is likely, then I don't need to worry about shorts. If things set up so that they're short, the market's selling off, I don't need to worry about that. I don't need to sit here with my finger on the mouse, all nervous, looking for what I should be doing so I don't miss moves short. If the market's tempo changes and I'm looking to the short side, then I'm not looking long. So again, I'm moving from long to neutral to short to neutral. I am hardly ever moving from long to short to long to short to long. I'm going neutral because I want to really, it's the Monty Hall problem, um, where I want to look at the market from one side and just trade the one side until it's exhausted. And there are very specific things that I look for that tell me that a rally is exhausted or a sell-off is exhausted. We've discussed those a lot at Convergent. I've talked about them in public webinars. But that's how I keep things simple. We're going into summer trading, so don't get chopped up. Good luck today, and I'll catch you tomorrow morning. Take care.